Welcome back to the program. Well, strategy and planning crucial in constructing a high-performance portfolio. According to my next guest, who just so happened to win the Stock Picker of the Year gong at this year's Stockbroker Awards, here to share his secrets, Chris Conway from Australian Stock Report. Still dining out on that one, Chris Conway. I'm not surprised. Oh, there he is.
Thank you, James.
Remind us again what the stock was.
So no, it wasn't one particular stock, James. It was about 40 recommendations over the course of the year. So it's judged against about 20 or 30 other analysts and brokers in the industry. And fortunately, I was able to come out on top this year. Have finished in the top three out of the last 4 years. So there's something to be said there for some consistency, I guess.
Then you are the man we want to be talking about then too, as far as strategy, particularly in this market is concerned. And before we get into the actual sort of strategy, is there a time that people need to have? Is there some times where it's more important to have a strategy than other times? There's a lot of talk at the moment, a lot of the press is around where we are in this bull market. The idea that we're in the latter stages and volatility as a consequence is elevated, and perhaps you're not going to see the same kind of growth we have seen in the past. Your thoughts on where we are in the cycle and then how planning sort of overarches all of that?
So James, certainly one of the elements of my sort of plan is assessing the market, and it's a very early part of the strategy. So yeah, absolutely. You've got to understand the market that you're trading in. Is it up? Is it down? Is it sideways? What is the valuation compared to the historical average? So right now the ASX PE is about 17 times and the average is about 15 times. So it's fair to say the market is fairly full, slightly overvalued by historical standards. So, if you're a new trader coming into this market, you probably wouldn't throw all of your capital, as in 100% of your capital, into the market. And if you are heavily invested, then yes, right now might be a time to take some profits. And that's sort of what we've seen lately with the ASX 200. It has rolled over a little bit, and I think people are taking some profits post-reporting season. So that is absolutely an element to it. But I think, back to your original question, is it important, or, are there times where it's more or less important to have a plan? I would say no. I would say you have to have a plan all the time, and it's amazing how often I speak to retail investors who have probably been in the market for quite some time but still don't actually have a plan that they could write down on a piece of paper governing the way that they will engage with the market. Haphazard preparation leads to haphazard results, and if you don't have a plan, then you've got no way to assess and reflect and then improve and better your strategy. So I would say it's absolutely critical. In fact, it's probably the most important piece of advice I could give to any retail investor.
And how often, as a professional then, how often are you reassessing that plan, reassessing that strategy in light of what might be happening in the market, what might even be happening at an individual stock investment level?
I would say I'm constantly refining it. So yeah, look, I've been in this industry now for 12 years, James, and obviously the strategy that I employ now is vastly different than the one that I started with. I would say you add a few more tricks to your bag. I started predominantly as a trend following analyst, a trend trader, and now I would look probably just as much at mean reversion opportunities or mispricing events when there's a big stock announcement and something happens where a stock might fall 10 or 20%, but you look at the underlying fundamentals and it's still strong, so you use that mispricing opportunity. So yeah, I would say you're constantly evolving and refining, and as we all know with the market, the moment you think you've got it beat, it'll tear your face off. So you never relax if you want to be consistently good.
What then for you is the next step? Let's say that you've developed a view and a plan, a broad plan as far as where the market is concerned, and you're taking that next step, looking at actual individual stock selection. What are some of the rules or some of the lenses that you're looking at as far as investing in individual equities is concerned?
Certainly the starting point for me, James, is technical analysis, which obviously is the study of charts. Now, I know some fundamental guys would say it's like reading tea leaves, but I think it is a good leveler in the sense that everyone can look at charts. It doesn't cost you a mountain of time or a mountain of energy to buy a little piece of software that will scan the 1,800 or 2,000 stocks on the market and find those that meet the technical criteria you're looking for, whether it be trend following or mean reversion. So that's always the starting point for me. There's a couple of proprietary scans I run every morning without fail, and that's where a bit of discipline comes in. You've got to be committed to it, and that'll sort those 2,000 down to maybe another 20 opportunities that I'll investigate more thoroughly. And then it moves on to the fundamentals. So yeah, look, I don't claim to be a hardcore fundamental analyst, but obviously there's things that you need to look at in terms of, the quality of the balance sheet, whether margins are expanding or contracting, what revenues are like, whether there's any corporate actions coming up, sort of a fundamental checklist to make sure that you're not buying anything that's going to get derailed easily.
Do you talk to others, or do you look at research and recommendations of others, or just speak to sort of colleagues, peers about investment ideas, stock ideas?
Yeah, absolutely. So we've got an investment committee at Australian Stock Report, and we bounce ideas off each other. I think that's one of the most important parts of the process, because when you're sitting there and at your desk and you come up with an idea and you haven't couched it with anyone, it's the best idea in the world and you think it's going to be fantastic. You go and talk to someone for 5 or 10 minutes, or the team for 5 or 10 minutes, and they'll very quickly make you realise that there's probably some things that you haven't thought about and you would need to inject as variables into your investment decisions. So yeah, absolutely, talking to other people is critical. And in terms of research, yeah, definitely, you always want to be aware of how the industry is viewing a particular stock, because one of the things that you don't want to do, unless you've got a massive conviction about a stock, is you don't want to be swimming against the tide. So if you think you're going to go out and buy something and everyone else has got a sell rating on it, well, you know that you're going to have your work ahead of you.
What are the, you touched on technical analysis, I suppose fundamental as well. Thematic investing is another major kind of investing trend that we see. The idea of people taking a look, for example, at China, a growing middle class, and stocks that sell into or service that sort of growth would be one sort of thematic. Your thoughts around thematic investing, because some who very much like it, others suggest that it's too broad, that it can actually be a bit of a trap.
Yeah, look, I would say, James, that there's certainly a place for it, and it is, talking about the way my strategy has developed over time, it is certainly one of the things that probably more recently, as in within the last 2 or 3 years, I've paid more attention to, because I think there's times where themes can supersede just about everything else. A really good example in the Australian market lately has been in the tech space. Again, traditional valuation metrics suggest that some of the valuations in that sector are ridiculous and cannot be sustained, yet those share prices have kept going higher. Now, I don't suffer the same fate as, probably guys who are focused more on fundamentals, that I am prepared to depart from the fundamentals and just say, look, the price is the price at the moment. Whilst it keeps going up, I'm going to trade that stock rather than buy it and hope that in 5 years' time everything will be going smoothly. So I have a little bit more flexibility probably than some. And yeah, that's where that theme trading comes in. And like I said, the themes can absolutely supersede everything else that should make rational sense. So yeah, I definitely think they're worth looking at.
Right, let's talk specific stocks, and those that perhaps fit somewhere in this sort of strategy and plan you've just outlined. Mispricing is something that you touched on, and certainly something that a lot of fund managers look for in the market. Where the market is mispricing a stock. Anything fit the bill at the moment as far as you're concerned?
Certainly NXT. This was a stock that we bought recently. From the June high above $8 to the recent low below $6, it sold off 30%. Its results I thought were pretty solid. Its outlook was solid. I think a lot of people got disappointed by the fact that their uptake in their new data centers hasn't been as strong to this point as what they would have liked, and they haven't had any major contract wins. But 30% to me was just too big a fall for that stock. So that was one way there, that mispricing opportunity. Now again though, traditional valuation metrics on this one don't make sense. So you've got to look a little bit further out and see that this company has sort of a 10-year growth pipeline that is pretty well laid out. And the broader theme there when we're talking about themes is that data usage is only going to go up. We're data dependent now. So ultimately these centres will be filled even if it takes a little bit longer than people had been hoping. So yeah, that was one where, like I said, there's a mispricing opportunity there. Use that weakness to jump into what is still a quality long-term business in our view.
Yeah, that was NXTC, NXT. And what about the idea of momentum, trending sort of opportunities in this market?
So BHP and QBE are two that we like at the moment. BHP, sort of speaks for itself. So I've got some cheat notes here, James. We rank stocks in terms of quintiles, and there's a couple of factors that we look at. So price and earnings momentum, earnings growth, our growth at a reasonable price model, all top quintile for BHP. The big Australian, you can't really go past it. QBE, similar sort of story, earnings momentum, earnings and dividend strong growth. It comes up on our momentum quality value factor model as well as GARP as well, so growth at a reasonable price. So yeah, there's two companies that are trending nicely in terms of share price, but also rank highly on our factor models as well.
All right, Chris Conway, great as always. So, and good to delve behind the scenes, get a bit of a read as to how people actually pick stock, strategy and planning. Thank you.
Thank you, James. Appreciate it.
Chris Conway there from Australian Stock Report. Just before we take a break, quick program.